Hello, everyone. This is Alexander Horat, your host, and today we're joined by a very special guest, and that is Gary Savage. And Gary Savage is the founder of the Money Tracker Investing Newsletter and a widely respected expert in cycle analysis. With decades of experience studying market cycles, Gary focuses on identifying major turning points in gold, silver, and financial markets. His work helps investors understand where we are in the cycle and how to position for the next major move in the precious metals and beyond. Hello, Gary. Thank you for coming back on the show.
Yeah, thanks for the invitation again, Alexander.
Since our last interview, markets have continued evolving. Based on your cycle analyst today, where are we at now in gold, silver, and the Bitcoin cycles, and what should investors be watching most closely?
I think we're probably in the midpoint corrective phase for silver and gold. It's been my opinion that we're entering the parabolic quote unquote bubble phase for the metals, and we got the first leg up. The last two times this happened in 1980 and 2011, there was a correction in the middle, kind of cleared the sentiment a little bit, and then you have the second leg of that parabola. And the second leg's usually bigger. I think this one will be bigger as well, probably a lot bigger than the first one. But in my opinion, that's where we're at. I don't think it's going to take all that long to work through this. I know there's a lot of analysts are saying that we're going to have months and months of sideways chop. I don't think so. I think this midpoint correction, they usually kind of run their course pretty quickly, and it doesn't take them long to get back up to those old highs. And then when it does, that's when the public kind of thinks that they found a sure thing. Price came back quickly, and so the public piles in. That's what drives that second part of the parabolic phase.
Okay, so do you think gold and silver will continue to go down in this correction, or do you think it's hit the bottom basically?
Um, I'm starting to lean towards that was probably it. Um, in magnitude wise, gold retraced back to the 61% Fibonacci level, and silver, I think, went to the 78. So they did more than enough magnitude wise to qualify as an intermediate cycle low. Um, haven't really done much in the way of time, although we are kind of working through the time period right now as we try and base and get some more and turn that momentum back up. But I'm going to say I'm probably about 70% convinced at this point that we saw the lows a couple of weeks ago, and now we're just trying to turn the momentum back up. We need a couple of things to happen. Silver on the futures contract, which I think is March is the active month right now, needs to get back above the 50-day moving average, which is maybe a couple dollars higher than where it is today. Needs to do that. And then we need what I call an out of the blue day. That's one of those days where just really for no reason, you'll get a 5 to 7% or larger up day. I think that'll seal the deal. If we can get above the 50 and then get one of those out of the blue days, then I think the momentum has shifted and we're back to, um, well, we're starting that second part of the parabolic phase.
Could you explain the parabolic phase a little bit for the viewers?
So basically it's like the bubble phase of a bull market, and here I differ with a lot of analysts on this as well. I don't think this is just starting. I consider that the bull market in precious metals began in take your pick, either 99 or 2001. Gold double bottomed at 255. So I think the bull market started at that point. The first stage of the bull market reached a top in 2011. And we had a cyclical bear market that lasted for about 4 years, bottomed in the fall of uh, 2015. And then we've been in the second phase of this long term secular bull market. That second phase of that bull market started at that bottom in the fall of 2015, and we're going on 10, 11 years, so it's getting pretty mature. It's about the time you would expect that final parabolic move where the average mom and pop trader thinks they've found a sure thing, and this is what's going to allow them to buy their next island, and they all start to pile in, and that's where price just goes vertical to the upside, and you get this huge stretch above the moving average. For silver, it could literally be 200 or 300% above the 200-day moving average. For gold, it could be 100% above the 200-day moving average. And you start to see, the average people bragging about how much money they're making in a market, whether it be the housing market or the crypto market. But in our case right now, I think it's the gold market. So I'm just looking for some signs that momentum is ready to resume. We don't have it yet, but I think it's probably going to come here pretty quick.
And one question I was wanting to ask you is we see the Shanghai markets for gold and silver. There's a big disparity between that and the London market. For some reason, it's much higher than the London market. So I was wanting to get your thoughts on why that's the case.
Well, the metals in general and silver in particular have been suppressed for years and years through the paper markets, and now the chickens have come home to roost. It's created shortages, and we've actually had deficits in silver every year for about the last 5 years. So this was always going to break. The suppression was always going to break. Eventually, the physical markets would end up with shortages, and it would break the paper manipulation. I was under the impression it probably broke last year when they failed to keep it silver below $33. It kind of went from 30 once it finally broke through that level, it went to 37 pretty quick, consolidated there for a bit, and then made a beeline to 50. Didn't take very long for it to break through 50. Once it did that, the dam broke, and we went pretty quickly up to $120. Now I will say, the crash was it 2 Fridays ago, has all the earmarks of probably one more successful suppression in the market, but I'm willing to bet that's probably the last one they're going to be able to pull off. It probably just going to make the shortages even worse. And so the banks are going to have to deliver. There were a lot of contracts that were standing for delivery. So they were looking at having to deliver a lot of silver at $120 an ounce. And so one last desperate move to crash the price of silver so they didn't have to deliver at that high price. But I don't think they're going to be able to pull that off anymore.
So do you think that any banks will fail due to delivering gold?
No, I don't think any banks are going to fail, but I'm sure they've lost a lot of money on that run from $50, the breakout at $50 to 120. I'm sure they lost millions, if not billions. They managed to save themselves a little bit with this attack a couple Fridays ago, but if they don't get out of their shorts, on this, then they deserve what they get.
Yeah. So do you like the physical gold and silver better, or do you like investing in the miners in the stock market?
Um, I like I like both. I think everybody should have. I think you should have most of your capital in physical gold and silver. Um, a little bit you can trade. Um, my preference right now is just to focus on silver because I think it's playing catch up to the rest of the metals complex. Gold obviously broke the suppression back in, I think it was March of 24, when they tried multiple times to drive gold back below 2000. They didn't succeed, and then it just took off. And we had, the huge move from 2000 to whatever the recent high was. I think it was 5,600, if I remember right. So huge short squeeze in gold. The miners also kind of broke the suppression. I think maybe it was in the summer of 24 when they really took off, and they've had a huge move. SIL, the silver miners, I think from that bottom to the recent top was about a 400 and maybe 20% move. So huge move. I think it's time for silver to catch up to all of those. So I'm in the camp that I want to just focus mostly on silver. I want to own a lot of physical silver, and when I think we've got a cycle low, especially an intermediate cycle low, I might want to use a little leverage in like SLV, or you could use PSLV as well, which doesn't mean that you can't trade the miners, but I just think like the ETF SLV, I think is going to outperform the ETF GDX. Now I'm sure you can find some junior miners that are going to, outperform silver, and maybe they'll even outperform some leverage positions in silver. But what are the odds you're going to be able to find those, a handful of junior stocks that the market's going to decide to reward, as opposed to buying a bunch of junior stocks that are maybe never going to produce anything and go to zero. So I just think you'll make plenty of money. In SLV, you'll make plenty of money. So I don't think you have to diversify unless you just want to into mining stocks.
Okay. So, how high do you think gold and silver will be by the end of this year?
So during the second phase of a parabolic move, it's not unusual at all for price to double, at least double. So at the recent high of 5,600 for gold, I would think once we start that second phase, gold should at least double. So 10,000, 11,000, maybe even close to 12,000 seems reasonable to me.
Mm.
Um, at the at the top, we should see a gold silver ratio of at least 30 to 1, 30 ounces of silver to 1 ounce of gold. And I think this, decades of suppression is probably going to mean that silver is going to go higher than it would naturally. So 20 to 1 or maybe even 15 to 1 seems possible to me. So if we get $10,000 gold and we get 30 to 1, I think that, what is that? It's like $330. If we get $10,000 gold and we get 20 to 1, that would be $500 for silver. I think both of those are realistic targets. I think 300 is definitely a realistic target. 500 might be a bit of a stretch, but because of all the suppression over the years, I think it's very possible.
So at that point, would you sell or no?
Yeah, I would absolutely sell. When something goes parabolic like that, you have to sell. And the narrative is always that the fundamentals have changed. But here's the thing: sentiment overwhelms fundamentals. When sentiment gets too bullish and everybody that's going to buy has bought, there's no buyers left. And so smart money usually is first. They'll start to take profits first. Price will start to go down. And then as all the people that bought along that parabolic structure, as their stops start to get hit, the selling starts to intensify, selling begets more selling, and you end up with that parabolic move collapses. They all do. So you need to try and ignore the narrative when you get into a parabolic move, because it's not going to stop the collapse. Sentiment is more powerful than fundamentals. And when the profit taking starts and the stops start to get hit and fear starts to spread, then generally what happens is the move down goes, far beyond what the fundamentals would suggest would be a natural bottom. So yes, I absolutely, if we get a parabolic move, gold goes to 10,000, gold and silver goes to 3 to 500, I absolutely will sell everything. I don't want to hold any of that through, a big a bubble popping and a big collapse that could shave off 70 to 90% of the price. Again, has nothing to do with fundamentals. It's just that sentiment is more powerful than fundamentals. And until that sentiment gets completely washed out, and all the buyers that bought on the way up and all the people that are trying to hang on for the long term finally give up and sell, then that's where you'll get your bottom. But that bottom usually is 70 to 90% loss. So yeah, you definitely have to sell if this turns into a true parabolic bubble.
Okay. So one thing that I've been looking into as well is copper. We've been seeing copper as close to all-time highs, not quite. Where do you think the copper market's going by the end of this year? And do you think it's a good metal to invest in?
It's just not a market that I'm interested in. I don't really pay any attention to it. Um, I kind of just stick to the markets that I know: precious metals, the stock indexes, oil, and I do a little bit with Bitcoin. But because I think the metals, well, they have silver's broken out of a 50-year base. Gold broke the suppression when they failed to drive it below 2000. So I'm just focused on the metals. I really don't care what any of those other markets do, and they might outperform. I don't care. I want to make money, and I think we're going to make plenty of money in the metals. And when we have a corrective phase like this, I just bide my time until the momentum kicks in again, and then we go in heavy again. Um, if once we get an intermediate cycle low, we'll go in heavy again with some leverage for our trading account. But I'm not going to be, wandering off into other markets trying to make something happen. Generally, what happens when you do that, you got a market that's moving really well. You get a correction, people get antsy. They've gotten used to making money, a lot of money, quick, and now all of a sudden that market is correcting. So then they want to, look around for something else to buy. And usually, what they do is they'll jump into a market that's already moved pretty good. Um, energy energy stocks would be an example. So like the metals have stagnated here. So now they want to jump into something else, and they see that energy has moved big. And so they assume that it's going to continue to move big. They jump into energy, and usually what happens is they'll jump in right around the time that you get a short-term correction. And then they'll panic out, once that, because they were expecting the market to just keep going higher, and instead it corrects. And now they've shaved off some of their gains from their metals trade. And maybe at that point, they've lost some money in energy, and they're trying to hold on to get back to even in energy. And that's the point at which the metals bottom and they start to pick up momentum. And now you're shell shocked and you're paralyzed. You can't sell your energy because you'd have to sell at a loss, and you're not sure that the metals are taking off again. So what generally happens is when people jump around trying to make something happen, always trying to produce, every day, every week, this is what happens: is they jump in at short-term tops, they lose a little money. Whereas if they could just be patient and wait, the market, if you dance with the one that brought you here, then you're going to make good money over, a year. And that's what I keep telling people. If you'll give me a year, we'll make money. We'll make a lot of money. You have to be patient though. When metal's correct, I mean, it's time to get on the sidelines. That's what we're going to do. We're going to get on the sidelines. We're not going to be jumping around a whole bunch of different markets trying to make something happen. And that strategy has worked really good for the last 2 years, and it'll keep working good until I think the bull market in metals is over. And then at that point, then sure, I'll start looking for something else to invest in.
You did say you're following the oil market. So, where do you think oil's going in the next year? Do you think it's going to go up in price or probably not?
Well, it's been my opinion that it was probably going to be in a long basing phase.
Mm.
Now, if we attack Iran, or the war in the Middle East starts to intensify, or Europe decides that they want to start World War III, then oil could take off. I don't know how to predict those two geopolitical events though. So barring that, I'm thinking oil is probably going to have